Hey everybody. I think we'll get started here. Other people can trickle in as they need to join. I want to welcome everyone to this first Badger Dow quarterly financial presentation. This is obviously the first of these events that we're doing. We're really excited to surface some of this data. And again, thank you all for joining. Excited to share this stuff. Appreciate your patience as we go through some of this. As you have questions, please feel free to put those in the chat. Try to get to all those at the end. I think that'll be the easiest way to get those all together. So we'll just go ahead and jump in. What we're going to be going through today is the first half 2021 financial summary. So this includes everything from January through June, and it also includes the December of 2020 results, just because we only had one operating month last year in that quarter. We're only going to be covering that. So we're 6 months in, 7 months in. We have four main product lines, which we'll cover. Really quick, we'll go to our disclaimer. So obviously, all of this is a work in progress. Do not take any of this as financial advice. We've made efforts to make sure things are accurate. Things will be improving. Guidance will change. We can't be 100% certain about these numbers just because we will probably end up reclassifying certain expenses and transactions. We are very light on forward-looking stuff in this report just for those exact same reasons. We wanted to just make sure that we didn't give guidance that was just going to be wildly changed. We'll go ahead and look at a quick overview, some of these numbers. So first half of 2021 by the numbers. Presentation will essentially break things down, starting with revenue and then kind of move into some of the expenses stuff. But in the first half of 2021, obviously, including December, the Dow at booking had $19.1 million in revenue. So the way we do at booking prices, essentially, we take the daily average price of an asset, and then we book any assets that come in on that day at that price. So that's how we get this 19.1 total revenue at booking. If you've seen other numbers from us, you'll probably see that our total treasury value at current values is around 15. That's obviously because of market downturn. So very interesting thing to think about. Yeah, so we have our total revenue booking. Again, that breaks things down by the price of the asset on the day that we received it. We have our operating income, which is 13.3. So that is taking our revenue, subtracting essentially our expenses from the current value of our revenue. So we have essentially $13.3 million in retained earnings. Obviously, we haven't accounted for anything like taxes and different things like that, but it's all things that we have in consideration. We're looking at putting together a fund that will just take a percentage off of every asset incoming, essentially, and set some of that money aside. We have, as of the 30th, we had $392 million total value locked. Things are up a little bit since then. Obviously, this number jumps around. And to be clear, this is non-native assets. So this is Bitcoins, REN BTCs, Curve BTCs, all that stuff, WBTCs, the Yearn BTCs, REN BTC from Bridge, and even IBBTC. This number fluctuates quite a bit. I think since the time that we captured this, it's up about 15%. Then the fourth portion is total treasury assets. So you can see we have about $32 million in treasury assets. A major portion of this is attributable to the $21 million that we got in the diversification, the strategic diversification. Remember, that was the partner diversification that we undertook with a number of bigger whales and bigger participants. So this is pretty representational of the total value that's in the treasury, save for native assets. So this doesn't include the Badger and it doesn't include DIG. You can see also at the bottom we have a couple little disclaimers here. So those are throughout, mostly for safety. They do add a little bit of clarifying information, but let us know if you have any questions on any of that. And then again, back to the disclaimer, we don't have any on-chain data for Binance Smart Chain. Most of the ways that we've sourced data for this report are from Dune. Shout out Gasudo, who's in the chat here. He's been doing a really, really fantastic job of writing queries. We've worked together to update our income queries and work on logic and just make sure things are nice and extensible as we release new products. He's killing it. But again, we have no BSC, so that'll be essentially we have to wait on Dune to release that. Otherwise, we need to find a way to catalog the information. It's stored on DAOWatch, which is maintained by Tritium, who's another member that's on here. But that doesn't give us really strong historical data, and it doesn't give us anything we can really check back on. It only takes data while it's running. So Badger DAO story. And actually, first off, really quick, again, this doesn't include BSC, doesn't include DIG, and we also don't really have any forward guidance in here. Again, the reasoning behind that was that we realized we would need to adjust quite a bit. So look for some of that stuff coming soon rather than being here now. So the Badger story, right? We're 6 months old. We have 4 product lines. We're a decentralized autonomous organization focused on building products and infrastructure necessary to accelerate the growth of Bitcoin and decentralized finance across multiple blockchains. An ecosystem where projects and people from across all DeFi can come together and build and release collaborative offerings. So I think we've done a really good job in the last couple months of really striving for this mission. We have our initial sets, obviously. We have the bridge and we have IBBTC. So not only do we have our initial product line, but we have our partner product lines. The partner product lines like the Yearn set and IBBTC, which is done with DeFi Dollar, those are splits in revenue between us and the partner. But what they really allow us to do that's awesome is it allows us to focus where we're good and allows others to focus where they're good. For DeFi Dollar, it wouldn't have made a lot of sense for us to create our own IBBTC when they already had those contracts, and it's something they're good at. So we launched there. When we're talking about bringing Bitcoin to DeFi, we got to look at kind of Badger holders and participation. So right now there are over 26,000 Badger token holders. Not as many of those, not a super high percentage of them are staked, which means that we need to do a bit more of education around how people can participate in the Badger ecosystem and what they really can do with their assets. But that 26,000 number it's pretty awesome. We've had 61 closed governance snapshots, most of which passed, and have all had decently high participation. Those are again on the forum. Each of these is decision-making points that the core team or contributors decided the community needed choice over. In terms of the bringing Bitcoin to DeFi side, so far we've had 4,400 Bitcoin bridged in or minted. Pretty awesome for that. It's been a much higher inflow than outflow, and you'll actually be able to see some of those numbers a little bit later. You'll see them broken out, but we've had quite high inflows. And the reason that we actually mention these numbers, this bridged in and IBBTC minted, is because we consider those top line revenue growth. That's revenue, that's essentially an indicator of future expected revenue. Because as people move bridge in, there's an expectation that a portion of those assets are probably going into our sets. As people go into IBBTC, those are assets that are in our sets. And when someone exits IBBTC, we recognize those. So we have Poe in the comments here, thankfully, too. He just mentioned that 26,000 token holders number is pretty Sybil elevated. He said he would be telling more using Badger holders with more than one Badger. So we actually are working on this. We have some queries in the works to figure out essentially the hold times and the number of holds or the dollar value of holds and get a nice distribution of that. But those will be coming out soon. You can see, I think Tritium just put in the, is that to Sammy? Okay, TVL. So Tritium just answered the TVL question. But we'll have queries up for that very soon. So you'll be able to look and you'll actually be able to see not just Badgers, but any of our sets. You'll be able to see a distribution of depositors and the amounts they've deposited. And then you'll also be able to see a distribution of hold times. And then again, current treasury value, 15 million, that was mentioned before. The difference between total assets and treasury from the first slide and current slide is the total assets in the treasury on the first slide are booked at the price on the day that they were received, essentially. So the fact that the current value of the treasury assets is less than that booked value just shows that the market is still down from most of our asset acquisitions, call them, or revenue events.
Hey,
Uh,
real
yeah, I want to have Wes jump in. Go ahead, because I just saw you were able to get in the chat.
Yeah, no, just in terms of revenue and bookings and cumulative revenue, best way to think of it is just like FX revaluations. I mean, look, most publicly traded companies had to do the same thing when you think about Brexit and other parts of the world where, you have revenue at bookings and then, UK decided to leave and then that changes and requires all these kind of FX revaluations. It's just not as common. For DAOs and DeFi, it's going to be very common. So not sure what the final look of this will be, but you're probably going to have like revenue, at booking, and then probably some amount of like revenue with FX revaluations included, so you can account for like the volatility of the market and kind of share both. So
Thanks, Wes. Yeah, so when we're looking at the total revenue, obviously we have the Badger token, which represents the ecosystem. It represents all those holders, represents governance making decisions, and there's things in the work to change our economics model and improve some of that stuff, make it so that there's real attributable value to the Badger token. But essentially, the DAO has four main product lines. We have our bridge, which is, and they're listed in this order just because essentially it kind of has to do with how the assets will flow in. But you have the bridge, which is our native Bitcoin on-ramp. It's a partnership with both the bridge team and the Ren project. So we can look at Bitcoin being flown in or coming in across the bridge and think of that as a good indicator about kind of people's attitudes about Bitcoin and DeFi. Not necessarily that those assets are going to be used one-to-one in our set, but there is some expectation that if someone is going to use the bridge, they're probably going to want to deposit in our sets. The sets are obviously product number two. Chronologically, they came out first, but in terms of kind of the order of operations for the flow of someone coming into our ecosystem, when someone's bridged in, they can go directly into our sets. Pretty soon, when someone's bridged in, they'll be able to go directly to IBBTC. But essentially, the sets obviously are yield products, right? And then when we get to IBBTC, it is a basket of our yield products. And then we have DIG also included here. This is something Wesik might want to touch on. We haven't included true real number breakdowns for DIG just because we've been trying to figure out how to kind of account for that. But we have that as one of our core product lines just because we do think it's something that can drive value. And once we have some of those peg mechanics fixed and some of the stabilization taken care of, it will be a lot more valuable in the ecosystem. Wes, you want to say anything there?
Yeah, I mean, it's a core product. I think we're probably gonna have to consult with CPAs to determine like how to actually look at this from a revenue generation event. Like, basically is it kind of income or capital gains? Because it's basically the positive rebasings could be revenue generating. Obviously they're not now, so no need for jokes there. But like at the end of the day, like, long term, if it is able to expand and follow a similar ample like path, then it's just something we need to account for from a revenue standpoint.
And some of you guys might recognize Wes has been kind of taking charge with DIG, and he's going to continue to do so. He's been doing some really awesome stuff between the rebase mining things and some of the content he's put out. So make sure you follow him and pay attention to what he's talking about, because if you're interested in DIG, he's your dude. So right now, Badger has a 43% circulating supply, and roughly 35% of the supply is still owned by the Treasury, which means about 78%, almost 80%, is somewhat accounted for. We have a remaining 20 that's between other initiatives, whether that's Gitcoin, that could be emissions that are remaining, or XYZ. So top line revenue growth is the next section we want to move into, and mentioned it earlier again, but the reason we have top line revenue growth, and this is somewhat differentiated from some of our other revenue, is because top line revenue growth is revenue that we believe is indicative of future unearned revenue. So this is Bitcoins brought in through the Badger bridge. Again, that's native Bitcoin that's brought into DeFi. So we look at that and we'll have to figure out some type of multiple there, but it's foreseeable that a portion of that would go directly into our sets. Some people use the bridge and directly mint into our earning sets. Some people just bring into Ren BTC or WBTC and we'll move on. And that's fine because we still earn revenue. But if we can figure out the percentage that's essentially expected to move through to our next products in line, we'll be able to get a really nice indicator there. Another one of those indicators is IBBTC minted, right? Because IBBTC minted is, again, that's, set essentially interest-bearing Bitcoin built between us and DeFi Dollar. Those can be, deposited elsewhere in the ecosystem. And what we're seeing is that a lot of IBBTC is being minted and not a lot of it's being burned, which means that the volume in the market and the market cap of IBBTC itself is growing. And with IBBTC, I think, you've seen probably fee changes and different governance chats within the last couple of weeks. IBBTC, really the goal of that is going to be to get as much liquidity as possible, because the more liquidity is there, the more that can become a competing asset. And it can really just be an asset that people use and like go into as one of their first forays into Bitcoin and DeFi. That's our ultimate goal, right? So we have here a total revenue breakdown. So, and this is going to be in the, this will be in the doc. So we'd published, but we're going to republish. So all of this information will be coming out probably later today in some format or another. We haven't figured that out exactly yet. We tried to publish a document and we're just having issues with that, but this will all be fixed and up and ready for your viewing pleasure. But essentially, here's a revenue breakdown. So we have our treasury address, right? We have our revenue wallet. And one of the things here is that the revenue wallet used to be the main destination of revenues. Now, a portion of revenues flows into the B65, the treasury address. There's still a small portion that flows into the revenue wallet. And as we kind of like navigate some of this stuff, we'll be updating and trying to fix and simplify how some of these assets flow. But for now, that's the case. You can see that in terms of our revenue, the Sushi WBTC F has been accounted for quite a lot of income. Let's say 6.4 total million. If we look at that on a performance versus withdrawal breakdown, that is about 11% taken in X Sushi and about 90% taken in the SLP position. You can see at the top our bridge revenue here. So that's, in the last number of weeks. And then for the most part, each of these is performance and withdrawal fees. We'll have more kind of a breakdown, and in some of the next slides, actually, there's a breakdown, kind of overall breakdown of withdrawal versus performance. And we'll have more accurate stuff coming out that breaks down withdrawal versus performance on a product by product level. The reason that the BTC bridge is on there twice, that's a good question. Yeah, because of the fee split. No, yeah, that's right. Okay, it's because on the one side, sorry about this, I should have labeled this, but on the one side, it's mints or BTC bridged in, right? So the top line is BTC bridged in, the bottom line is BTC bridged in, top line is BTC bridged out. I will update that before I release this presentation, just so that's clear. Just taking a note. Sorry, thank you for pointing that out. And then you can see the BSC, we have just kind of a rough number, and this was number as of the most recent snapshot prior to the end of the quarter. Pretty low earning, obviously. We tried to make a splash with BSC, but I think we essentially hit right as that was changing a little bit. So it's something we have to kind of examine, I think, and figure out how we want to move forward. We're obviously looking at how we launch on Polygon, which I think is going to be probably a bit more successful just because people, don't have that hold back. I know personally for me, I didn't move into any BSC sets because I'm really about the decentralized ethos, and I just didn't, it didn't seem like the right thing to do. But with Polygon, I think more people are going to be interested in that, especially with things like IBBTC being broadly used as collateral across the ecosystem. So really quick breakdown of kind of new revenue growth. So since launch, 90% of our revenue has been driven by core products. And what that means is essentially 90% of our revenue is attributable to sets. 80% of that revenue is attributable to our original sets. So, our Curve Bitcoin sets, and then the SLP set. And then about 10% has been attributable to the Yearn Vault since launch. With that Yearn Vault, there's obviously some contention there because some of the fee stuff is still kind of dubious. I think some of that is being worked out. We're really trying to make sure we get community feedback and take governance opinions without just trying to be prescriptive. But I think, at the end of the day, if we want people to continue using our products, we need to make sure we have a very competitive fee model. I think part of that needs to be moving towards more of a performance strategy. and lowering the management fee, just because that will make it so that, if your assets are just sitting there and they aren't really earning, you're only getting a fee on the marginal amount, right? That's the use of something like having a 30% performance fee versus having a lower performance fee and a higher withdrawal, is that you're only getting charged on the amount you make. It's essentially like a high water mark. Let's see. So we had 2.5 times as many Bitcoin bridged in versus bridged out, which is, again, this is like kind of goes back to our top line numbers. This is really great. It just shows that, on average, there's more inflows than outflows. Again, not all those are coming straight into our sets, but those are Bitcoins that are being moved into DeFi. And if we continue to push ourselves as the place to be for Bitcoin and DeFi, we stand to benefit. There have been over 1,000 IBBTC minted. Obviously not as high as some of the other assets. Like there's much more WBTC than there is IBBTC. But each day, I think we continue to kind of refine what that looks like, what that needs to be, and how are we really going to drive liquidity there and get more people in that. So the fee changes have been a major thing for that. And then there will be incentive changes coming soon. And then not included in here, but just a quick mention, is that we will soon have accounting for our convex sets, because Sudo's working on those now in Dune. And we're also going to have Polygon sets pretty soon. And we kind of expect those Polygon sets to follow in like a similar line to the convex sets, and I'll explain there. The convex sets, essentially when convex launched, we started seeing what they were doing. We looked at Curve, and we started just kind of thinking about our position in the ecosystem and the position of a lot of yield aggregators. And we realized that a lot of what was going on was, the kind of the parasitic farm and dump. And we realized that wasn't really where we saw ourselves in the ecosystem, and kind of contributing and continuing to stay with that paradigm. So the convex sets are the first concerted effort and thank you to Poe for putting a lot of these strategies together. They're the first concerted effort really at trying to have ecosystem friendly vaults. So there's a limit on how much of the farmed asset that we sell. We obviously need to provide returns on Bitcoin, but we also don't want to just dump convex. We don't want to dump convex Curve. We don't want to really dump any of these partner assets, right? We want to make sure that at the end of the day, we're contributing positively to the ecosystem. And the best way to do that seems to be to identify good assets and make sure that we're holding them, rather than just trying to, maximize our dollar denominated return or Bitcoin denominated return. This is a breakdown of the top line revenue growth. So you'll see it only really starts in April. Again, this is not all revenue. It doesn't account for even the bridge or IBBTC burns either. It doesn't account for sets, none of that. This is purely just revenue that we consider top line. So what that means is that it's assets flowing into the ecosystem, right? So we could foresee that Bitcoin being bridged in, essentially, and obviously this is our fee. This is not indicative, or this is not the total amount of Bitcoin bridged in. But we could see Bitcoin bridged in going into our sets, with IBBTC. We know at some point when someone mints IBBTC, there will probably be a revenue recognition event when they potentially exit that. You can see a nice breakdown here of essentially this is our P&L metrics. So you can see our bridge revenues, right? Again, start in April. You can see our set revenues, which start in December, our IBBTC revenues, which start in May. And then dig revenues here, we just have the space for it, again, not accounting for it yet. But on each of these, you can see a breakdown. So you can see the mint versus burn. On the set revenue, you can see withdrawal versus performance. So you can verify some of those kind of overall trends there. IBBTC is the same. And I guess technically dig would have negative rebase expansion. So that'd be like an offsetting, like negative contra account type thing. But at the bottom, then you have combined revenue. So we have all of our mints, all of our burns, and then the mint and burn down are the numbers that contribute to the total revenue line. So mint and burn go into the mint and burn, and then mint and burn, the one line revenue item, all the way down into total revenue. So you can see essentially our growth. And the thing to look at, I think, or the thing to think about here when you're looking at kind of our growth percentages, is obviously it's very lumpy. And a lot of this is attributable to the fact that we do have very large depositors. in some cases. Some depositors are small, some depositors are large. When a large depositor exits, it can create a really big event, revenue event, like February, for example. I believe about a 20% of February's revenue was attributable to one major depositor withdrawing. So obviously, like the March actuals total revenue growth, it gives us a nice little negative revenue growth. But if we smooth that out and we looked at kind of like an average, like trailing average, we're essentially kind of at stasis or growing slightly. So then we can move into operating income. So operating income is obviously gross income minus operating expenses. We have essentially a breakdown. So this is our Q2 top line revenue growth. Again, this is going back to this number here. So just our bridge mints and our IBBTC mints. You have a note here about why it's just Q2. We have an earnings per share about $1.51. That is with an $86 million market cap. And then we have a 6.3 price to earnings ratio. So that's just taking the price of Badger, which at the time of this was $9.47, and it is dividing it by the earnings, 151. So we have about a 6.3. It's gone up just a little bit in the last couple months, but we can kind of expect that it'll stay around this if things remain steady. It's been sitting anywhere between 4.5 to 6.5, and just kind of bouncing based on price. The denominator on the 151 earnings per share is the total revenue. So it's total revenue over market cap, but circulating market cap, excuse me. We have a quick breakdown of our expenses here. So you got expenses by spend on this top one. So you can see that 68% of our expenses have been in Badger. This is great because, obviously we have a good supply of Badger. We do have USDC, but, anywhere we can that we can spend Badger is a place that, one, we're aligning incentives. We're incentivizing someone and making sure that they have upside. And then we're also not spending dollars, which the dollars portion is like we can pay for hosting, pay for some of the core team, expenses, that type of stuff. We have a breakdown by spend category here as well. This is rough. And a lot of this stuff will update. We'll have more exact numbers as we figure out exactly how we want to attribute certain expenses, right? This is pretty rough breakdowns of like, G&A and admin and different stuff like that. But we have about a 5.7% hosting and administrative costs. So that's going into AWS, that's hosting on blockchain. That's even some of the audits that we've gotten done. We've had about 57% has been core, and that's between people that have joined and gotten bounties before, and also essentially people that have been on the team for a little while. Grants and bounties, we have 37%. So that's the monthly grants, which are moving now towards project-based grants. And that's also Gitcoin bounties, not the Gitcoin amount that we put aside right at the beginning, but bounties that we paid out since. A lot of those have been issued through Tritium. Casudo came on through bounty. Wesic has been doing bounties. So the bounty system is a really, really effective way for us to find new contributors and find really talented people. Not included here is the $2 million we spent in the Annex, which is for Opolis and Zero Confirmation, both products that are in the works. Zero Confirmation will be ready pretty soon. And then we have the $300,000 that we spent on Badger.com, which is, again, in the works. I think Will might be able to answer better, but we should have Badger.com up within the next month and a half. I believe we were waiting on a hosting transfer or some type of certificate that needed to be changed to make sure that ownership was transferred. And then we have our overall operating expenses. Again, we have cost of sales, total gross profit here comes down from the revenue number, which was above here. Then we have operating expenses, right? And these are broken down essentially by in each month, we went through and we tried to figure out what percentage we thought of each expense was attributable to each section here. And so that's how we arrived at these numbers. And again, like I said, with the guidance stuff at the beginning, consideration is just that some of this stuff will change. We'll probably reattribute certain expenses and, go in and make sure that we have tightened some of that stuff up just internally. And then we'll also probably be talking to a CPA or counsel and kind of making sure that we have an exact idea of how to categorize certain things. Obviously we'll want to really like optimize our situation here. So it will take some time, but I think the end product will be worth it. So you can see our operating income down at the bottom. Again, all this stuff will be like really easily, you'll be able to look at this in the presentation once we post it later. But yeah, that's pretty much what I got in terms of structured content. Thank you to everybody for joining. Thank you to Wesik for the help preparing these documents. Thank you to Gasudo for the Dune work that he did. And thank you to William for putting the event together and helping us with marketing. I know Will wants to say a couple words, and then maybe we want to jump into Q&A, or do you want to do it the reverse way, Will?
No, I can jump in now. That's great stuff. Yeah, thanks for putting everything together, and what a great turnout today we've had. Yeah, I just wanted to go over a couple of things that we were talking about prior to the kickoff today, Mason. So for everybody here, the intention around Treasury Talks is to be sort of a monthly focused event series that it'll evolve as we evolve, of course, but the key differentiator, I guess, in terms of the topics that'll be covered month to month will be, sort of a monthly update similar to, what we saw with the Treasury retrospective that Mason published a month ago. And then, these quarterly reports. So, we kicked off our first one today, focusing more on a quarterly report, taking a look at, the first half of this year. So a great sort of starting point for all of these. But also, again, as we move forward and grow, this will evolve, but really wanted to give a great touch point for, all things related to Treasury and finance, a little peek under the hood. Obviously, all of this information is out there, but wanted to take you through some of the thinking and give, our Treasury folks and Mason an opportunity to kind of dig deeper into some of this stuff. So great turnout today. POAPs will be available. So just reach out to Tom on Discord, and those will be available for our events. For all of those who have DM'd, and apologies if we haven't gotten back to you, those will be available for all of our events moving forward. So all good there. Tom's OX, Tridium. He's our POAP guy. So you'll just have to provide proof of attendance for today. A screenshot should do just fine. And yeah, we'll be making this report available online afterwards. So look out for that later. Likely be posted in deck format, PDF format, and live on our wiki. And as for the update on website, the team's going through a bit of a refresh and reorganization of how we want to present our content. So no exact timeline on when that goes live, but it's something that's sort of top of mind from a communication standpoint to really organize our content ecosystem a little bit better and be able to host a lot of the content and information that we put out through events and articles and all that sort of in one place. So stay tuned for updates there. And with that, we can open it up for Q&A, and feel free to throw it into the chat, or if anybody wants to speak, happy to answer questions over voice as well.
Yeah, go ahead and raise your hand if you'd like, or just jump on up if there's anybody that has anything. So the current Treasury assets, essentially the Treasury I showed was just revenue. It doesn't include any of our native assets, which are Badger and Dig. I want to say it's like about, if you do include those, it's about 65% of our assets are Badger. Obviously, we'd like to get that down. I can post a more general overview in the presentation as well. So I'll include a non-native and native breakdown. But for now, we are essentially angling. I mean, it's Bitcoins. We've been holding XSushi. We're going to be holding Convex and Convex Curve. So typically, it's kind of like making sure that the assets are productive, right? We'll also be staking a bunch of our Bitcoins pretty soon into some of our own assets, or in some of our own vaults, excuse me. So we'll be dogfooding a bit. And then our stables, all except about 30% of them are staked in Aave and Compound. So those are also earning. So where we can, we've aimed to make sure that we have productive assets. Wes, you want to add any color to that?
No, I think you hit everything. In terms of like diversification, recurring diversification strategies. Obviously, this is an ongoing process to determine how we can quickly, manage assets in the most productive way, especially if you look at our earnings per share and PE ratios. We're essentially a high growth company and trying to, maximize our liquid assets for both like innovation and pushing growth to its fullest, but also how to best optimize returns through various staking strategies is always going to be a core part.
And sorry, just real quick to throw that out there, because I think the question is kind of about the mix of assets, right?
Mm-hmm.
So far, our strategy has been not to trade assets. So we keep revenue in whatever asset it is, right? We keep the sushi, we keep Curve tokens, we keep SLP, Bitcoin, ETH. And so we haven't really thought about like rebalancing our own portfolio at the moment. But I think in general, the goal is to like accumulate Bitcoin.
Yep.
Correct.
We've accumulated 266 Bitcoins so far. Something that Gasudo and I have been talking about actually is trying to create potentially like an administrative set. So a set product where we can identify certain assets that we want to move into. We can identify essentially like percentages of diversification we might want to do. We really want to see if we can kind of automate that, systemize that, because we can make discretionary choices, but that's not scalable. So the aim has been not to do that, to try and make more data-driven stuff and go from there. Let's see. Okay. For revenue generated, Sammy asked, for revenue generated by Polygon BSC future deployments, will you store this on their native chain and pay for expense related to their chain through those wallets, or bridge it all back? So BSC, those assets have stayed there. I mean, I think I foresee us probably keeping most assets on the chain where we earn them, because those are where we can be productive with them, right? If we're on a chain, we should want the chain to succeed. So that kind of brings in the ecosystem friendly stuff. So we should be looking for assets that are going to not only produce a return, but they can do so sustainably. And anytime we find some of those assets, I think we do want to hold that. Not saying that I've necessarily identified any of those, but for example, like it may make sense to hold some Matic, even though Matic fees are absurdly low. But I think leaving the thing where it is and then trying to find how to use it most productively is going to be best, rather than just clearing everything back to Ethereum. We also just spread out our risk there, right? I think it's not that there's much, there is a little bit of marginal risk from going on to an L2 like Polygon versus being on Ethereum and stuff. But I do think that at the end of the day, the wider varied sources of revenue that we have and types of assets that we hold, the more better position we're going to be for the future, right? Some of that stuff we'll be able to put more data in the coming weeks and months about too, and actually really be able to make data-driven decisions. So would you be looking at any stables? Yeah, so we hold USDC, we hold Aave USDC, and we hold Compound USDC. And then we also have a Yearn V2 vault position. I believe that's the that's the 3-curve vault. Any other L2s we're looking at? I think we really need to make sure we just get Polygon launched and kind of like set. I think we really need to define how that is going to fit. Your question about, are we going to sell or are we going to move things back to other networks? I think that's a valid question. And those are kind of decisions that we need to talk through before we really make a concerted effort at other blockchains. I think we want to just make sure that like we're releasing a product that's like we're going to see through, and then we know and we see further use cases for any assets that were created, and like we fit them into our ecosystem. But if there's any L2s that people are seeing and think there's like some really good activity popping up and that it might want to be a place where we're early to, we obviously would love comments on that type of thing, and you can feel free to reach out on Twitter or over Discord or in the chat here, however you want to reach out. Happy to chat about that. Yeah, Tritium, you mentioned Arbitrum. I haven't done as much research into Arbitrum, but yeah, I think you're right. I have been seeing a lot of people get really excited about it recently. It seems like a decent network. Part of it is really going to come down to this, like, what do we really think our thesis on L2s is? Sometimes I look at myself, like personally, I look at it and it's like, I'm doing some of these polygon farms and I'm looking at it and it's like, does this feel like the legitimate base asset? Then you have things where it's like, I think like Rari is launching, or there's a fork of Rari launching a franchised fork, essentially launching on Polygon. Is that going to, will people look at that as the official Rari? I think there's just questions, around like, what do people, it just comes down to narrative at the end of the day. What is the story around the chain? Do people trust that it's decentralized? Does that matter even, like with BSC, some of the people don't care. So just like evaluating really what is our strategy before we make some of those decisions. Are there anybody else have any thoughts, questions? And yeah, we're gonna fire up a finance like channel in the general Discord pretty soon too. So we'll have a dedicated place where we can just kind of start having conversations. It was something we realized just with trying to do things on the forum that it was a little bit too structured. So we're gonna have that Discord, and that'll be a great place for us to chat. We'll share periodic updates there, and then just like if there's ideas, they can be shared there, or new places Badger can be used. We'll try to surface all that stuff. I try to keep a pretty good eye on things. So I'm excited to start sharing that and really being able to have conversations with y'all. But yeah, if there's no other questions, or if there are questions and you want to just message me, feel free to do so. Probably do like a kind of little tweet thread when we release the article or the presentation, and we will go from there. Okay, let's see. On the expense side, without giving guidance, can you talk about how the planning has evolved? Yeah, so we've added some people to our team. When we did the initial expense planning on the ops side, I'd essentially set aside twice what we imagined the budget to be. So we're pretty set there. We have that cash just in the wallet. We also obviously have the USDC that's productive in Aave and Compound, which is pretty safe. I think we've added about 2 or 3. We've had some turnover, so we had a couple people leave the team, and we've added a couple people. I think the planning, I think we're expecting for the team to grow, still kind of have that double margin in there to make sure that it's like we have enough cash. But we're a high revenue business. We have pretty low overhead, and really we need to be all about innovation. We need to have new products. We need to be putting stuff out. We need to make sure we have a cohesive narrative. And I mean, in like a high growth startup environment, the best thing we can be doing is hiring. So that is why you see, the team portion of expenses is the higher portion. The same with the bounties and the onboarding stuff. And yeah, like Ben mentioned, we are always looking for developers. So please hit us up. Okay, Sammy, last question. What are the plans for expanding and managing non-operational income? Wes, do you want to touch on that?
Yeah, I was actually just going to speak a little bit about, I guess, both these questions. I think up until now, everything's been about trying to put financials together, grow, innovate, kind of go. And I think the next phase of this is probably going to be trying to apply some element of like management reporting over operational expenses. And so with that, if you think about when an annual planning cycle for most companies occurs at the end of the year, they try to look at payroll, non-payroll budgets. They try to, figure out where they think they're going to spend and how they want to spend and where, and then they, manage that throughout the following quarters and update accordingly. As Mason mentioned, the goal right now is trying to hire quickly, especially devs. You want to try to, ensure that there's no bottlenecks, especially for a high growth company that's trying to meet demand and innovate quickly. So the next phase here is probably going to be trying to formalize more of the structures around management planning so that we can ensure that there's no delays. And, truthfully too, the more runway you give people to feel like they can go out and make decisions and work quickly, the more agile they become, the faster they innovate, the quicker they grow. And in terms of non-operational income, so that basically covers all of like operational, like OpEx income. Is there a question on non-operational income sorry, maybe I missed that last part, Mason, is
Sammy said, sorry, last question. What are the plans for expanding and managing non-operational income? So I guess, is that maybe a question around booking and kind of investment income potentially?
Yeah, I think, as you have more assets under Treasury, the question becomes like, what's your M&A plan, right? Like, are you looking to innovate? Are you looking to buy? Are you looking to like do more with your cash, your liquid assets to make a return on them. And I think that's what Mason mentioned pretty well. I'm happy to answer anything else on it, but I think the goal right now so far has been diversification for down market preparation. And then, as they look for other possible strategies to earn and stake on assets, trying to maximize as much as we can. The other potential option might be in the future, like looking to, are there any acquisition opportunities to move faster? I can't speak to that myself, but in a typical company, they'd be looking probably towards acquiring R&D versus in-house. So, yeah.
Sweet. Thanks for the answer, Wes. Yeah, if there's non-dumping philosophy extend to EPS, I'm not sure. Poe, maybe you want to type in the chat if you're still here about does the non-dumping, the ecosystem-friendly vaults, does that extend to EPS, or are we selling EPS? If he doesn't answer that, I'll make sure that include that somewhere in release here.
Just real quick, talking about kind of like future investments and how we're thinking about that. One of the things that Badger did was dedicated this, there's this 5% of our token supply that's focused on Gitcoin. And as we've developed that relationship with them, actually what Gitcoin is looking for us to do is to use their environment to encourage innovation. So we've been spending some of our money on that kind of to try to encourage general innovation. We're also trying to slowly use it more to do things that are useful for Badger. And then starting in October, I think we're going to run like a 6 to 8 week incubator with them, where we're going to really start to look at using the Badger Annex more to incubate new ideas and just try to start getting some things that are happening around Badger and that Badger is getting value from and that are creating value in our ecosystem, but aren't necessarily requiring our core team to put a lot of focus into it.
Thanks, Ben. That's a great answer. Yeah, so Poe answered in the side chat too also that we don't have a formalized strategy on EPS right now. So that's, again, another place where it's, if you want to jump into and I'll actually get this channel created once we're out of here, finance channel, but we can start chatting there. Maybe someone has an idea about how we can use that most effectively. But sweet. We're on the hour here, so I want to be considerate of people's time. Thank you all for joining. Thank you for great comments and questions. And thank you for being Badgers. You guys are the real reason that we're here. And it's exciting to work and check in with y'all and try new ideas and test things and make mistakes and find solutions and all that stuff. So thank you again so much. We'll talk to you guys later. You guys have a great rest of your day, all right?